ever since that deal, again, it was probably 3 years ago now, I walk every property. I make sure if I'm investing in it, if I'm bringing investors into it, I'm walking that property myself. I'm shaking hands. I'm meeting operators face to face, because that's, I think, when you get burned. Some people can fool you pretty well.
Welcome to the Physicians and Properties Podcast, the show where we teach you how investing in real estate can give you the freedom to practice medicine and live life how you want.
Doctor! 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 Doctor!
Now, here's your host, Dr. Alex Schloe.
Hello, everyone. Welcome back to another episode of the Physicians and Properties Podcast. So excited to have a return guest, Dr. Kyle Stephenson, on the podcast today. If you have not yet listened to episode 72 of the Physicians and Properties Podcast with Kyle Stephenson, go do that. It is an incredible episode. We talk a lot about his journey as an orthopedic surgeon and into real estate and entrepreneurship. Through that podcast, Kyle and I have become great friends. It's been really awesome to grow together over this last year. So I wanted to bring him back on the podcast and talk about what we've learned over the last year. He hosted an incredible conference called the Legacy RX Conference. He helped start the Doctors Investment Group. So many things have happened and changed. So wanted to bring him back on the podcast. This one's going to be even more kind of conversational and exciting, but there'll be a lot of value add. So Kyle, welcome back to the podcast, man.
Thanks, Alex. Appreciate you having me on, man. It's been great getting to know you over these last year, basically, and get to hang out in person in October. And it's been great getting to know you, and you're even better person in person than listening to the podcast. So,
thanks, brother. That means a lot. I feel the same thing about you. And man, it was a great time in Indianapolis. I didn't think in 2025 we'd be hanging out in box seats on the field with Gary Brackett and the Colts Anvil and all the above. Man, it was an awesome experience.
Yeah, it really was. Yep. And I appreciate you with your help and your expertise, with a lot of the guests over there. They loved your story, just how big of a, Christian you are, family man, and obviously successful doctor and investor. So you had a lot to give to that conference, and we appreciate that.
Thanks, man. I appreciate the opportunity. Let's talk about the conference, Kyle, if you don't mind, because so much goes into a conference and finding speakers and the venue and the food. And man, it was awesome. And that was your first one, and you really crushed it. What were some things you learned along that journey for folks who are listening, thinking like, maybe I'd want to host a real estate meetup or host a conference or something along those lines? What were some things you learned in that experience?
I learned a lot. I came up with the idea about a year ago. Really I was doing some like local meetups and stuff like that, and had a good following doing that, which is great. And a lot of people had good feedback, and they're like, this is great, keep this going. I've got sponsors. And so I was like, let's take this a little bit bigger, and came to my wife with the idea about a year ago. And she's like, okay, sounds crazy, but all right, let's see what you got. And, people at the conference were like, to my wife, you did such a great job. I'm sure you put a lot of this together. And she's like, honestly, I didn't do a whole lot. Like, he did it all. So there was a lot that went into it, a lot more than what I even expected, which is, it was the idea was awesome. Just getting, setting up the venue and having the vision, like that's all like sounds good and easy. It's a matter of executing. And I think we did a good job, but it wasn't flawless. And there's a lot of things that will change for next year. But in saying that, gosh, the big things that I would say, honestly, that I learned is there's a lot of people out there that want to take action, and they, make the phone call and they're like, oh my gosh, this conference sounds awesome. And then don't show up. That's one thing I learned, which is kind of crazy, but I think it's human nature a little bit. I was definitely expecting, I had an idea of the people that I knew would be there that weren't, which is kind of wild. And then texted me afterwards and they're like, man, I really missed that, didn't I? So that was one big thing I learned is some people are unwilling to take the action to get in the right rooms. And that was one thing. Some other things, just having a local meetup is a no-brainer. Like, that's great. And everybody should do that. Trying to do a big conference, first time without much help is probably not a smart idea. So again, next time around, I would tag you and Frankie and some other guys to, help out. Not that you weren't willing to, but it's just a matter of, using your resources, right? Using your team to help you out with that. So those are some big things. I think collaboration ultimately was awesome, having you and Frankie and David Price show up, and then all the speakers. I mean, that was the highlight for me, is just the fact that you guys wanted to be there and were willing to come and help out and bring your expertise was phenomenal. So, I think piggybacking off that and using that leverage for next year would be very wise of me.
Yeah, absolutely, man. It was awesome. You did a great job, and I don't think you're giving yourself enough credit. It was a really awesome conference. And I think something that I took away from it even more so, and I think we all kind of know the importance of being in the right rooms with the right people, but it's like taking that action to like really get in the right rooms. But the other thing that was so cool is like, me, you, Frankie, like we know each other through podcasts, right? We've been podcast guests with each other. We've connected and we've talked a lot since then, but it's crazy to see how you can create a relationship virtually through Riverside or Zoom or whatever that may be, social media. And then like the relationship builds even more in person. And like you mentioned, I feel the same way about you, man. You're a way better guy in person than you are on social media and on podcasts, and you're incredible. And so it's just really cool to be able to like start those relationships and just get in that room, even if it's virtual. Like maybe for someone who's an introvert, that's the easier step, is like, let me virtually get in the room and then have the courage to go in person. And so I think, for folks listening, we're on the start of 2026, like thinking about how I can get in the room with the right people who are going to help me grow and expand and like really open my eyes to the things that are possible is so important. And I see that with you and Frankie. I mean, and I was stretched, so much just during the conference and, late night conversation at the bar and at the hotel, like just things that we've learned and grew. And then kind of all of that coming together in person was really, really cool to see that synergy. And so I would encourage folks in 2026, get in the room, whether that's virtual, whether that's in person, and kind of find your tribe.
Yeah, absolutely. You're spot on. And, and that's why I wanted to start, that conference too, just because there's conference, the White Coat Investor Conference out in Denver, I think, coming up in March. There's the Passive Income MD Conference out in LA. But I didn't know of anything going on in the Midwest. I was doing my research and I'm like, for anybody that's more regional and I know you're out West, but it's hard for people on the East Coast or the Midwest, to go find these conferences or fly out. So I'm like, why not get something going here more regional to tap into this area and get people more face to face. And then on top of that, yeah, we all see each other on social media, but our relationship, was on steroids once we saw each other in person, right? You can get feedback on or more transparency, more honesty, like everything on social media looks perfect. And then when we all talk, it's great to like have real raw conversations to say, hey, this works, this doesn't, this is what I would do different, and help each other out with that.
Yeah, absolutely. I agree. And I think, same with this conference, right? Like the true value of the conference is, certainly the speakers and the schedule, but also the things that happen in the hallway, the conversations in the hallway, the conversations after hours, conversations that happen after the conference. And so it's really cool to see those relationships. So that was really awesome. Speaking of, relationships, community building, let's talk about Doctors Investor Club. That was a big undertaking that you took on in 2025. So what is the Doctors Investor Club? And tell folks a bit more about that, Kyle.
Yeah, definitely. I think it's important work that we're doing with this, and I'll explain the origin of it. So, 2.5 years ago, I really started getting more into real estate as a general partner. Before I had my own single family homes, things like that. And I started getting into more like the multifamily space, the bigger assets. And I was like, man, how do I educate more docs on this stuff? At the time, I thought there wasn't very many of us doing it. And so I started the podcast, Assets and Orthopedics. And through that, just like you're doing, you have all these cool people on. And I've learned that guests, you ask them, hey, do you want to come on and talk about yourself? Well, it's not hard for them to say no, right? So bringing cool people on was great. And I listened to this podcast of a guy named Richard Wilson who was on, and I thought he was brilliant, very smart guy. He's the CEO of what's called the Family Office Club, top investor club in the world. And he has like 16 live events a year. Anyways, I was just very impressed with him. So I reached out to him, sent an email, and he got back to me as a good CEO would. Got back pretty quick. It was like, hey, by the way, I see that you host this podcast. If you're looking for somebody that, to talk about this, I can. I love doctors. So he came on the podcast we built a relationship. We talked more, and he's like, hey, I got this idea of a doctor's investor club where we spin it off my family office club. So instead of you doing your own events, you can have every doctor in this doctor's investor club come to our events basically for free. I mean, you join the club for free, and then you just have to get out there and get your hotel, of course. But you join these events. And so he's like, let me get you a ticket to one of our events. You come check it out, see what you think. And I went out there and my mind was blown. Like, I'm hanging out with, he's got a professional athlete investor club. He's got all these other, centimillionaires and billionaires that are coming. And so I showed up as like a peon of a doctor and rubbing elbows with all these big time guys, doing a lot of big investing and wealthy entrepreneurs, former professional athletes doing big things. And so I loved it, man. I was like, I am all in on this. So yeah, him and I started the Doctors Investor Club to piggyback off what they're doing with the Family Office Club. And basically for physicians listening, I mean, you can sign up for free. We can put the link below. And basically there's an app where we can connect. There is, he's got like 40 AI tools now, 40 plus AI tools that are legit AI tools, like all the white papers from any, investor summit that he's ever put on, interviews from investor summits that he has put on, any public billionaire conversation or interview. He's like funneled those into these AI tools. I mean, he has like legit, it's not just from Wikipedia, right? And so you can get on this Doctors Investor Club, use these AI tools, connect with other doctors, go to these live events. He puts on 16 a year. I'm speaking in Dallas about capital raising here this month. And I missed the one, they do a big one at the end of every year, December in Fort Lauderdale. And Grant Cardone, billionaire, came and spoke. He was the keynote. Yep.
That's awesome.
The one I went to in Beverly Hills, Meta World Peace, i.e. Ron Artest, formerly known as Ron Artest. He was the keynote speaker. He's like a big time, I knew him from, playing in the NBA, but he's a big time entrepreneur. And I got connected with him, got connected with his business partner, had him on my podcast. Kenny Anunuke is former NFL Super Bowl champ, and he came and spoke at Legacy RX, and I know you got to hang out with him. I met him on one of those events. So it's, to your point, it's being in the right rooms, and I don't think enough doctors especially are doing that. And so it's like, if we want to think like the wealthy, then we got to be in the right rooms, listen to what they're doing, and this is the best way to do it.
Yeah, I completely agree, man. It is huge. Speaking of Kenny, Frankie and I went and had dinner with him downtown in Indianapolis. And yeah, Kenny, Super Bowl champion in a suit, looking like a total stud, got a Super Bowl ring on from winning the Super Bowl with the Broncos. Frankie's an orthopedic surgeon, Frankie Davis, been on the podcast a couple times as well. And it was so funny, man, walking down the streets of Indianapolis. We go to this nice restaurant. We walk in and they're like, sorry, we're reservations only and we're full for the night. And they saw Kenny's Super Bowl ring and they're like, hey, right this way. We'll sit you right here. Nice. It was awesome. And so it was wild. I called my wife and I was like hanging out with the Super Bowl champ. And Kenny was like just such a down-to-earth, genuinely great guy, great husband, great father. I mean, we had some amazing conversations and only a few of them had to do with football. And so it was just a really cool time. And, I say all that to say a lot of times, as physicians or just people in general, we see these professional athletes, or we see these millionaires, billionaires, whoever it may be, and we almost kind of put them on a pedestal. And we forget the fact that like they put their pants on the same way in the morning as we do, and they're just genuine, down to earth people. And so it was really, really cool to make that connection. And so you just never know what's going to happen with those relationships, with those conversations, with being in the right room with the right people. I know we're really foot stomping that hard, but I think, if more and more physicians do that and get in those right rooms in 2026, man, it's going to be just an absolutely incredible year. So I'm pumped for that.
Game changer.
It sure is, man. What are some other things you learned in 2026?
Real quick, I just want to say, just hearing your experience with the conference, and I mean, you pretty much had VIP treatment that whole weekend, Yeah. You got to hang out with NFL Super Bowl champ for dinner.
Yeah.
You had to go to the Colts game, sit in the suite. You were living the life, man.
I was, man. I called my wife and I said, you know what? I could get used to this. We gotta get things going a little bit more. So we're playing too small. Yeah, man. It was an incredible experience. So thanks again for that. And for folks next year, you got to be at the Legacy RX conference. It's going to be awesome. You got a lot of work to do, Kyle, to make it even better. It's going to be cool, man. Yeah, man. What are some other things 2025 taught you? I know we were talking before, and we learned a lot of
Yep.
lessons in 2025, a lot of wins, also some losses. Let's share some of those.
Yeah, good question. And, I had dinner with my wife and my mom the other day. My mom's a widow. My dad passed away last year. And so we took her out to Christmas dinner, and it was nice, just good without the kids, get to talk. And she's like, man, you're doing a lot. Like, when you started doing this stuff, did you know it was going to be successful? And I was like, I just laughed. I was like, Andrea, look at my wife. I'm like, has it always been successful? No. I said, Mom, when you win, you win. When you lose, you learn. And we lost a lot. There's a ton of mistakes that we've made over these past, not just last year, but last few years, I would say. And we've learned a ton from it. But the key is to have more wins than you have losses, right? And I think that's what, we're all trying to do here. But when you lose, you learn. I think that's a big, big thing. And yeah, so, things I learned, first of all, if a deal sounds too good to be true, it is more than likely. My dad told me that for a long time. And sometimes you just need to feel it. You need to experience it yourself. And, I got burned a couple of years ago. I actually talked about it on my podcast. One of our speakers who at the conference, fantastic guy. And, I trust him and all that. But I think he got into a bad deal as well and ended up being a Ponzi scheme a couple, 3 years ago now. We've more than recovered. It's not, a huge deal, luckily, but that was one thing that we learned was, again, if the deal is too good to be true, it probably is. And the other thing I learned on that deal is I never went and saw the property myself. It was out west somewhere. And ever since that deal, again, it was probably 3 years ago now, I walk every property. I make sure if I'm investing in it, if I'm bringing investors into it, I'm walking that property myself. I'm shaking hands. I'm meeting operators face to face, because that's, I think, when you get burned. Some people can fool you pretty well. The other thing I learned probably in 2025, the last time I came on the podcast, we talked about our hotels. So maybe 2 years ago, we bought those down in Louisiana, and, still had a great vision for it. Me and the operator still talk every day. And it's one of those it has not panned out like we expected. We're not necessarily going to lose money, but we're not going to have the returns that we were hoping for. And so it's one of those where, again, I got investors into this deal. I trust the operator. I trusted myself. And we're going to cut it loose here soon, and we're going to move on. We're going to sell it, at least get our money back, if not make a little profit, but we're just ready to move on. It's one of those where it's like, it's almost causing a little bit more stress than what I would want. And I know if I got rid of that property, stress would be a lot less. We'll put it that way. So those are a couple things, maybe mistakes, lessons learned, I guess. But all that being said, it's taken me to another level, right? Now, the experience and the knowledge I've gained from all that has taken me to another level to where I know who my mentors are now. I know the guys I can trust. I work with a team now who they just do multifamily real estate here locally. I went to high school with one of the guys, the CEO of the company. And, I get to have coffee and drinks with them, weekly. And so I know those guys. I see them. I shake their hand. I talk to them every day. And that's the kind of trust I want. I've learned that if I'm going to invest with you or work with you, we have to be aligned in all facets. And that's probably a big part of it, right? So like you and I, Alex, align very well. We're both Christian, first and foremost, family guys, we love our wives, we love our kids, high integrity. If you're not aligned with that, I don't care how much money you're going to make me or think you're going to make me, we're just not going to work together. And so that's a big lesson I've learned. And I love that. And that's going to take me way further than anything else.
Yeah, man, I think that's huge. And I think that's something I've learned too over time. It's almost more so, sure, returns are important, right? But I would gladly take lower returns to be aligned with someone and partner with someone who I really know, like, and trust fully. And I think that's important as you're kind of vetting out potential deal opportunities to really understand that. And that's something that I wish I learned earlier. We were talking offline about, a deal that I raised some capital for and my partners raised some capital for, partnered with an operator for some assisted living properties. And it has not been a favorable experience either. And unfortunately, it's the first lawsuit I've ever been a part of. And, luckily, it's going to work out. And we've been paying investors out of our own pocket the preferred return because we feel like, hey, that's what we need to do. We want to keep that relationship intact. We want to have high integrity. But man, it hurts. It really hurts. And we're going to, we're in the middle of that lawsuit and, more to come. And hopefully there'll be a good resolution to that and everything will be fine. And in the long run, it's just an expensive learning opportunity. But I think it's important for folks to hear some of those failures along the way. And luckily, more wins have stacked up than losses, and that'll continue to be the case. And, I was talking with a guy who's done a ton in real estate, is probably worth about $100 million. And I was talking to him about the lawsuit, and, he was eating me up like crazy. I'm like, man, I can't believe this happened. And we did everything we thought was right, And he's like, hey, man, this could be the first of many. And he's like, if you stick in this game, it's just going to happen. And he's like, as long as you remain integrous, as long as you continue with integrity and your faith and putting your investors first and continuing to, follow the Lord and go after this journey that God's called you to, it's all going to work out and it's all going to be fine. And he's like, so just stop letting this beat you up. It's going to be all right.
Yeah.
And so it was huge, man, especially when you are talking with folks who've been doing this for a long time, or folks in the family office club, I'm sure have similar stories and experiences. But the key thing is to kind of bet on the jockey and keep running the race.
Mm-hmm. Yep. No question. And I would say for me, and this is important for listeners too. Like Gary Gunderson talks about this. He's an author who wrote What Would the Rockefellers Do? A couple other books, Killing Sacred Cows. My friend and colleague, Scott Jared with Invest, he talks about this too. Investor DNA, knowing your DNA and what's your deal filter, right? Like what deals do you like? What returns do you like? Things like that, and kind of figure out what your investor DNA is. And I've come to learn, like, instead of shooting for a home run, which is what I've done in the past, I am now totally good with hitting singles, hit singles, get a nice double, triple off the wall. Great. But I'm totally good with staying a little bit more conservative, knowing that I'm going to make consistent returns. I'm much happier with that.
Yeah, and I think that's really important. And I think having the courage to swing the bat too is really important, especially when you're getting started. I know we've talked about some deals that maybe have gone south or haven't panned out exactly how we hoped. That's life. It's going to happen. I mean, you look at the best baseball hitters who've ever lived, and if they get a hit 1/3 of the time, they're in the Hall of Fame. And so, there's going to be some times you strike out, but it's having the courage to keep going and doing everything you can to mitigate that risk, of course, is incredibly important. But, but yeah, man, I agree with you. Well, let's pivot to some happier discussions. What are some things you're excited about in 2026, man?
I will say, because we really started our passive syndications as an LP in 2020, I want to say, so 5 years ago. And we've exited 2 deals now. And so that was huge. 2 things that, it's when you're in the early phase of it, it's hard because you're like, man, I'm getting some distributions here and there, but we just exited 2 deals and that's great. You get a nice chunk and profit, and then you're like, okay, now I can deploy this into something else. And hopefully I've learned something along the way so I know what I can put it in this next time around. But yeah, I was very happy with that. So there is positive to it, seeing these big chunks of cash coming in, you're like, okay, this is why we do it.
Yeah, for sure. Yeah, that's all. I can't wait for that. Yeah, we're like I was talking to you about at the conference, we've done a lot of new development deals and kind of more long-term LP investing that are going to be 3 to 5 year holds. And so, yeah, it's hard when you're like, hey, I'm going to wire this check out and I'm not going to get much other than some distributions. But, that money's essentially wrapped up for the 3 to 5 years. And then you get that big chunk back. And it's like, hey, how am I going to recycle, recapture, repeat that money and go from there? So, yeah, I'm excited for that as well. We're working on some new development projects that I think will be really, really cool. One in Tomball, Texas, outside of Houston. We're going to build 32 memory care beds, 2 16-bed, 16-bath kind of mansion properties there. That's going to be awesome. Working on some independent living new developments in Florida. Those returns were crazy. That deal is crazy. Just a really cool turn of events and really great team. That came apart because of the podcast and an interview here on the podcast. Awesome. And so that was an awesome opportunity. Looking forward to breaking ground on those. And then a new development neighborhood in Springfield, Missouri, outside of Springfield. So man, too much going on. But I still like to say there's a lot of exciting things on the horizon for us and for you as well, I'm sure, going forward. Are you guys working on any deals over at Hudson?
Yeah. Yeah. So with Hudson, so we just finished a raise, value add multifamily up in Fort Wayne, Indiana, where they're putting $1 billion into that community, that city, second largest city of Indiana. And the thing I like about them is I'm born and raised in Indianapolis. And so we're doing all of 90 something % of the deals are here in Indy. My wife's real estate professional status. So, she helps out along the way, and she can, drive to properties and do what she needs to do for her due diligence as well. But yeah, we know this backyard, right? And that's another thing I've learned. It's like, I'm very content just investing here because we know it. And so the next deal, I'm not going to talk about much, but one of the managing partners stayed at our house. He just moved to Telluride in Austin, Texas. So he stayed at our house a couple weeks ago. And there's an exciting deal coming up here in this area, Westfield Carmel, where I live. It's a big, like, Class A property. And, sometimes, like, those aren't home run deals, right? It's not like you're going to get like a 20% IRR, but you're going to hit a nice single double, 12% consistently, because it's already cash flowing. You have to put no money into it. It's cash flowing. And the cool part about it is they had to basically interview for it. They had to underwrite, get the number right, perfect almost, interview for that deal. And they went up against some big dogs across the country and actually are taking it down. So it's cool because now we're kind of tapping into like the family office space a little bit, because there's so much money that needs to come into it. So now that connection with Doctors Investor Club, Family Office Club, we're bringing in some big family offices to come help out on raising money on that deal. And it's just cool to see all these worlds collide. That's exciting for me. I've realized I like being a connector. I can't say that I'm the smartest person ever, but I do love connecting smart people and being in that mix. And when I see that happen, it's like, it's the coolest thing ever, right? When you get that perfect connection, you're like, okay, that sparks something big. So yeah, there's some big things with that. Doctors Investor Club, like I said, I'm speaking in Dallas for a capital raising event, and it's basically just a like investor summit type thing in January. And then we are due with baby number 4 in March. So
nice.
That might keep us a little busy. My wife's saying no travel for the time being, after this.
That's awesome, man. Congrats.
Yeah. Thank you. Yeah. A couple of other things, so I talk to medical students all the time, right? And, you just had Brent Kessler on your podcast. I love the infinite banking stuff. I mean, we do it, and I'm not promoting it necessarily. I'm just telling you, my experience, and I've enjoyed it because basically it's growing 5 to 6% in the policy. We take from that, we borrow against it, and then I invest my money from that, which is cool. And what that's allowed me to do is be a little bit more conservative. I don't know what it is, but I'm a lot more protective of that money. I don't know. I couldn't tell you the reason. I mean, maybe it's because I know more, but so I'll invest it into a real estate deal. If that makes me, 12 to 20%, then great. It's growing in the policy at 6%, making 12 to 20% over here. It's working twice, and it's the same dollar basically. So, I've learned velocity of wealth. And the reason I say that is because I have medical students and residents that I talk to all the time. And I explain this to them, that you can let your dollars work for you multiple times. And that's how the wealthy truly build massive wealth. It's like that snowball effect, and it just keeps churning and churning. And it's pretty wild how quick it can happen. So, yeah, I mean, we kind of do like a little bit of a hybrid family office, if you will, put money into equities, cash value, whole life insurance, borrow against the equities with an asset line of credit, put that into real estate, borrow against the cash value, whole life, put that into real estate, and make sure that real estate is cash flowing. So it's spitting off dollars back to us, pay down those, that debt, if you will, and it spits off cash flow. It's pretty wild. So that's what I'm kind of like getting to that point of where, how do I explain this in an easier fashion to residents and medical students, just so they start to think that way a little bit. It's kind of rewiring the brain, if you will, but it's truly what the wealthy are doing.
Yeah, it's wild. I just, like I said, had Brent yesterday. We recorded the episode. It'll be probably 2 episodes back from this one, and go listen to that. It was really fascinating to hear about infinite banking and the money multiplier method. It just you're right. Like just a different way of thinking about how to use your money and make it work for you even more than kind of what we're typically thought from an investment perspective. So I'm definitely excited in 2026 to dive more into that and learn more about that, because it's really fascinating. Kyle, you mentioned talking to medical students a lot, residents a lot. What are some other things you think going into 2026 that you would want to share with medical students, residents, maybe new attendings who are getting started on their journey to financial freedom?
I'm big on thinking about macroeconomics. I know that as a medical student and resident, you're thinking about your next day of, cases or, medicine, but we do make good money. And the key is, what do you do with that money? When you're young, you start putting that away and investing it. That's going to grow like crazy, right? That compound interest is real, but starting to understand what to really do with your money is important. And the other thing I say about macroeconomics is you can't invest like our parents anymore. Like our parents, the way they invested 20, 30, 40, 50 years ago doesn't necessarily work today, because the government will continue to print a lot of money. I know that people are thinking that we're going to get a bunch of oil from Venezuela and we're just going to hit it big and pay off our $38 trillion in debt. But if you don't understand macroeconomics, then you're going to fall behind, because, I just saw something for, obviously we just finished 2025. Silver obviously shot way up. Gold shot way up. Bitcoin was down. But, your S&P 500 went up 16%. Your Dow went up. Your Google went up 64%, something like that. But what I noticed on that chart, and I posted it the other day, was the dollar actually went down over 8%. And people don't realize that. They think that inflation is 2 to 3% a year. Like, oh, we're only losing 2 to 3%. Not true. The government is printing money. They have to. We're off the gold standard, from 1971. So inflation is way higher than 2 to 3%. So if you just have money sitting in your bank account outside of an emergency fund, then it's losing basically 8%. So those are the things that I think young docs need to understand. Is macroeconomics is real. It's here. Robert Kiyosaki. I think he's brilliant still. I mean, I still love, Rich Dad, Poor Dad, Cash Flow Quadrant, just to get a big picture of what you should be doing with your income. Make money as a physician. That's great. But what do you do with that income? Do you just go buy the house, buy the car, buy the liabilities? Or do you go put it in cash flowing assets, and then from that, buy the house, buy the car? That's ultimately what you should be doing. So I would, we all read White Coat Investor. Good book. Good, Jim Daly does a great job. But I was also side by side reading the Robert Kiyosaki's, and I think that's what got us thinking the way we did. So I would, push people towards that, understanding macroeconomics, understanding what you should be doing with your money.
Yeah, that's huge. I think velocity of money is kind of something that's not really thought about that much. And it's incredibly important, as you just mentioned, right? If we're putting that money in a high yield savings account, getting 3.5% interest per year, we're still losing 4.5% in terms of that value of that dollar. And that's going to be, over time is going to be enormous. You're right. Gone are the days where you could put $1 million in your 401k and draw 4%, live off that and be happy. It's just not going to happen anymore. And so now is the time where you got to build up some of those other alternative income streams to support that. And then also, we haven't even really hit on the true benefits of doing that and the freedom that can generate and what that can look like for you and for your family while you're younger, while your kids want to hang out with you, while you have the ability and the health to travel and do really cool things. And so it's incredibly important. I always tell folks that, the med students, the residents, your number one job is to learn how to be a good doctor. But there's times and there's pockets in between. Like Frankie Davis used to listen to Bigger Pockets while he's walking to the OR. You probably did the same thing. There's ways that you can learn go the extra mile from a financial perspective while you're younger, and it's going to pay off so much, put you in a position when you're, mid 30s and you're like, hey, I don't have to practice medicine. I can practice medicine because I want to, and I can practice medicine how I want to. And that's going to be huge.
Yeah. I mean, with that being said, I read Robert Kiyosaki when I was in training, and my ultimate goal coming out of residency was to buy a Tesla. And with my first, big check, I bought a used Tesla, still have it today. But with that being said, I commend you and I commend Frankie, because you guys are much younger than I am, and you guys have taken action much sooner than I ever did. And honestly, the day I took action 5 years ago, I learned way more than I ever did prior to that, right? Like reading the books was great, but actually taking action just catapulted me into what I consider, a little bit more wealth, time freedom, if you will. Before that, it was just, working hard and hoping that you're fulfilled. But I see what you and Frankie are doing. And like I said, you're much younger than me. You guys figured that out a lot sooner than I did. So if I was a young resident now, I would be doing exactly what you guys are doing. And just learn from you guys. Find a mentor, learn from them. If Alex or Frankie or, somebody of that nature tells you to go read these 3 books and then do this action, then I would do it.
Yeah. Thanks, man. That means a lot. Yeah. It's also cool that it's, 4:00. It's 4:00 on a Wednesday and we're able to record this podcast episode. And I love that the kids are running around there because that means a lot.
Yeah. Did you see that?
Yeah, dude. It was awesome. I love it. Mine will probably be busting through the door anytime now.
It adds a human element to it, right?
For sure, man. It doesn't bother me one bit. Yeah. But that's awesome. Well, Kyle, let's be respectful of your time, man, and get things wrapped up here. Any parting shots, any other tips or tricks? You've dropped a lot of wisdom and knowledge on this episode so far. I think could be really impactful for folks.
Yeah, I think the big topics that we talked about is being in the right rooms. That's huge. Actually showing up to an event. I just had a buddy text me today. Is like, hey, which Doctors Investor Club or Family Office Club meeting are you going to? Because I need you. He's like, I'm not as talkative as you, so I need to come, when you're there so you can socialize for me. But showing up to those events, sign up if you're a physician, resident, young physician, doesn't matter. Go on to doctorsinvestorclub.com and you can sign up. It's free. And then you can show up to any event you want to. There's 16 to 18 live events. So being in the right rooms is very important. Finding mentors, very important. And, just connecting with others. If you don't have a local meetup, which I'm sure you do, whatever area you're in, go to a local meetup, whether it's real estate, finances, whatever it is, and try to understand that stuff. Because again, whether you want to believe it or not, you make good money. You're a physician, you make good money. And so what do you do with that money? It matters. And traditional financial advisors don't love for you to do real estate because it takes money away from them. They will put you into stocks and bonds and let it sit forever. And, the burnout rate's still 50 to 60%. So it's like, well, I don't want to just work for this job for 30 years and then come out and, sit on my retirement. Like that's not going to fulfill me. That's not going to make me happy. So understanding what to do with your money is very important. And being in those rooms, finding the local meetups, talking to the right people, hitting up Alex, hitting up me, hitting up Frankie, hitting up, Jeff Anzalone, whoever, and say, hey, what would you guys do in this situation? I think that goes a long way.
Yeah, I completely agree. We don't bite and we love to help. So yeah, feel free to reach out to us and more than happy to help out along the way. Man, with that, Kyle, it's been awesome, man. We'll go ahead and wrap things up. It's been Dr. Kyle Stephenson, Dr. Alex Schloe with another episode of the Physicians and Properties Podcast. Signing off. Hey, real quick, if you're still listening to this, I'm assuming you got value from it. So I need your help specifically. My 2-year vision with this podcast is to help 100,000 physicians learn how investing in real estate can give you the freedom to practice medicine and live life how you want. There are 2 main ways that a podcast grows. One is through ratings and reviews, and the other is word of mouth. If you can please leave me a 5-star rating and review on Apple Podcasts and Spotify, as well as send this to 1 to 2 friends that you think would get value from it, we can reach the physicians that we want to reach. Thanks in advance, and talk to you on the next episode. Please note that the information shared on this podcast is for informational purposes only and should not be considered financial or medical advice. The views expressed on this podcast are those of the host and the guest and do not necessarily reflect the views of the Department of Defense or the United States Air Force.